Hello, hey, hi everybody. Welcome to Dedicated to Financial Literacy. Russell Moore coming to you live again. Hey, buddy, got my son here. Hey, say hi, Benji. Say hi to everybody. Say hello. All right. I know you're about to play with your Hot Wheels. Listen, you guys, I'm not going to make him turn it off. We just say we'll edit it one day. We'll edit it out one day, okay? I just really wanted to briefly talk about the housing situation. I don't know if to call it a housing crisis or what, but so listen to Jerome Powell, the head of the Federal Reserve. I was listening to the head of the Federal Reserve, Jerome Powell, and it doesn't seem like, well, they're not going to raise the interest rates. They're not going to raise the rates anytime soon. And a lot of people were thinking that they were going to have some rate cuts first, second quarter of this year, 2024, and that doesn't seem to be happening due to how strong the job market is. He said he used that as an excuse not to bring up the rates, and so so they're not raising the rates. And right now, so if you want to purchase a home, you're going to be at around almost 8% interest rate, almost 8% for an interest rate, your interest rate for a loan. Think about that for a second. Another thing is the housing prices have not dropped much. Now they haven't risen to the degree that everybody was anticipating. Most of the analytics, they were saying that the housing prices was going to go up about 2.5%, 2.5%, 0.5, not even 1%, a 0.5% has the prices went up. They can't go up. If they go up any further, no one would be. I mean, right now there's a shortage on inventory, and the prices are still too high. I'm anticipating towards the second half of the year, the third quarter, I believe prices are going to start coming down significantly. Now, some people are, they might say something else based on data, but listen, let's look at this from a common sense standpoint. Due to inflation, I know they're saying inflation's around 3%, 3.5%, right? But what does that mean to the everyday person, the everyday consumer? The everyday consumer is paying more for all their items, everything, from food to gas to clothing, especially children's clothing, children's shoes, socks, undies, baby food, diapers, wipes. When's the last time you bought some wipes? Hello? Everything is more expensive, 30 to 40%. Eggs, milk, juice, you name it, it's expensive. It's more expensive. So what people are doing is they're budget crunching. They're trying to reduce their expenses. They're trying to cut back on spending. As a whole in this country, people are trying to cut back more on spending. Consumer spending is down to a large degree. So what is that going to do? What is that going to do? It's going to force the retailers. It's going to force the online sellers. It's going to force them to say, you know what, we got to reduce our prices. I went into Costco the other day, and there's several items where the price was down. For example, paper towels were $20, almost $21 for the huge thing of paper towels. I have it back there. Right now, it's down to $19. Batteries, AAA, AA, 9-volt, down, just a little bit. They're just marking off a little bit. They're not bouncing off of. They're not removing all their profit. Why are they doing that? Because the consumer is saying, you know what? Some of these things, if it's not a true necessity, I'm not going to buy it. If it's not a true necessity, I'm not going to buy it. People are more budget conscious, trying to save. Here's another thing. Credit card debt is up. Credit card debt is up big time, you guys. Why am I saying all this? All of this is affecting what people buy and spend. So a lot of people are saying, you know what? I'm going to wait to buy a home. I'm going to get more of a down payment. I'm going to try to put away more money, and hopefully the interest rate will go down. If it gets down to around 4%, 4.5%, 5%, you'll see a turn, and you'll begin to see people begin to really get out there and try to purchase a home. Now, some people are saying, you know what, I can refinance, so I'll just go ahead and get the home at this current rate, and then I'll refinance when the rates drop. But you got to remember, you're still getting that house at this price. I really believe if people will just sit back and wait and be patient, both will drop, the rate and the housing prices. Think about it. You're a developer and you're building all these new homes. And people decide, you know, I'm going to pull back. I'm going to wait before I buy. Well, they've got that inventory they got to get rid of. Now, one of the options that developers are thinking about, I know I'm beginning to see this trend more, and that is they'll build the homes and rent them. Build the homes and then rent them out instead of selling them as single family homes or condos or townhouses. They'll say, you know what? And we'll let the renters pay off our loans, at least now. And then, or they're selling half the portfolio, selling half, renting out some, keeping some to generate some cash flow. But we'll see, you guys, in the second half of the year. But listen to what I'm saying. I'm thinking by the third quarter, I'm thinking we will have a rate drop. It may go to the fourth quarter, but I believe this year, I still believe that there's going to be a rate cut. It may not be much, 25 basis points probably, 25. I doubt if it'll be 50, but maybe 25. And that'll be just enough to tell, you know, the mortgage lenders and credit card, all the auto loans, all this will say, hey, let's reduce our rates a little bit. All right? Well, I hope wish you the best. Thank you guys for tuning in. See, that wasn't long at all. It's only like 8 minutes that I did this. The key with me, though, right now is that I want to be, I'm feeling better. My heart is doing better. And so it's consistency. I want to continue to put out content. I know this channel is for newbies, new investors. Today, I just wanted to talk a little bit about housing for those that are out there thinking about purchasing a home in 2024. Overall, I think the housing market is down 4% year over year, 4% from last year this time. And so March wasn't a good month. March was not a good month. We'll see what the April numbers look like. But hang in there, hold on. Those that are wanting to purchase a home, your dream will happen. God bless you and have a wonderful, 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 wonderful day.